Alrighty, everybody. Good morning. Today is the 6th. It is Friday. We got the stream live for you here on Patreon, YouTube, Discord. Please comment in your questions in YouTube, Patreon, Discord, the Top Gun channel. Doesn't matter which one it is. We'll catch it before the end of the stream and address them all. But as folks join us here, folks, if you see the picture fine, we're looking at the SPY 5 minutes chart. It's 674 and a half. If you can see everything fine, you hear me fine, thumbs up, and let's begin right away. Okay, thank you, everybody. Let's begin here with the SPY. So we got a gap down because the jobs number was not pretty good. And of course, the price of crude continues to go up. Now we're trading at 88. And it doesn't seem that we have any relief inside here. You probably don't want to head to the weekend being short crude. You want to be long crude for now, at least. We'll see what kind of headlines we're going to get all the way to the end of the session. But so long as crude is going up, and the jobs report came out weak, but initially we got a drop. Then we popped higher again, came back down. So if there's any source of relief for the market today is the dollar coming back down just a touch. But it's not enough, to be honest with you, with the dollar going up. It's not enough to be a major source of relief for the market, because you look at the bond market right here, the 10-year, with a weaker jobs data, got the flush, and then we went back up. Why? Because crude oil keeps going up. And I think the same thing here is going to happen with the dollar, that if crude continues to go up, the dollar has to go a little bit higher. But for now, we see the dollar going down a little bit, and that's pushing the VIX a little bit to the downside. And we see a little bit of a rebound here attempting the SPY and the Qs. They're trying to move it as much as they can. Market makers, of course, trying to move it as much as they can. We will look at the numbers in a minute, but looking at Bitcoin here, anything going on in Bitcoin, it's not a reversal yet, because you need to lose the lows of this candle here. This is the breakout candle. And the lows would be about 67,391. We're still above, so no reversal, at least right now, in terms of confirmation. I'm going to go back to the SPY here and look at the options market. Today is the 6th. We have the 0DTE expiration dates. Right off the gate, we see that some of the puts were actually closing. So absent of the jobs data and crude oil going up, the tape should have been higher, not lower. But because we have the algorithmic action that happened here, we see the tape opening down. Let's give it a refresh here. See what happened. There we go. And we see that the OI change is in favor of the calls, but we still have decent amount of puts being added here. So I'm going to ignore the OI change right now. It comes down to the volume battle, because the OI change did what it did, and we have maximum pain in the calls, all losing money. But we yet to have to see a maximum pain in the puts. I don't know what's going on here, but let's see if it can come back or not. Okay, this is an issue from bar chart, I believe, because the other platforms are working fine. So I'm seeing live data here showing up in option strat, but bar chart is the one that's not working. Let's try again. SPY, come on. Yeah, it is screwing with us here. Anyhow, until it works out, I think that we have a little bit of maximum pain in the puts here that has to be exercised. And my 2 cents would be 675, 675-ish would be it. And then after that, I think that the open interest in the puts is way too high. So we should come back down again after reaching a little bit of maximum pain in the puts. But I can't give you the specific number since the data is not updating here. There we go. So let's take a look before it cuts off again. So I see here that the calls taper at 75. There's a gap all the way to 80, so 75 should be it, and then you go up to 75. You still have plenty of big open interest here in the puts that you can't really eliminate in today's session, so you're going to have to go back down. Market maker, of course, wants to avoid 670. That's a big number of open interest and volume. So they don't want to go back to 670. For the puts, for the calls, they don't want to go above, let's see here. I mean, they have plenty of room. They can go as much as 680 before facing big numbers. But again, if you go to 680, you're kind of playing with fire because we have a lot of open interest here that could expire in the money if there's a push to the downside. So I don't think that we have a lot more upside here in the SPY. I think we do a little bit of maximum pain here in the puts as much as the market maker can at about 675 and then come back down. Let's say about an hour, 2 hours from now, we begin to come back down again. If we look at the other big names, because each name is going to have its own weight in the S&P and the Qs and have different impacts. So here, if we look at Apple, we have daily chart. We got the bearish break going on. Support number 1 was touched at 255, and right now we see a little bit of support showing up, but be honest with you, could be kind of a bearish flag here, and we go back down. If we lose 255, then we have to go down to 250 in Apple. Looking at NVIDIA, zoom out to the daily chart, nothing really changing here in NVIDIA, but it looks like it closed the gap, and now if it begins to roll over and head down, that's going to be a problem, because if we do that, then it means that NVIDIA is probably heading down and aiming for the 200 days moving average. You got to keep an eye on AVGO too, because that's the outperformer today. If we look at the map, AVGO, a few names here, Oracle because of the layoffs, Palantir, but we see a little bit of a rebound in the defense contractors, energy, but besides that, the majority of the market is down. So AVGO is one of the contributors in the strength that we see in the SPY and the Qs and this rebound. It probably has to do with a lot of options because we have a lot of calls and puts being bought because of the report came out this week. So my 2 cents would be that some of the calls were bought for the 340, and this is why the market maker is trying to move all the way to the 340 just to hedge against that and then maybe come back down again. Microsoft not moving much today, but I mean, you can technically do it all the way to the rebound target of 420, but I think that we might reverse before heading 420 based on the data that we looked at in the video yesterday, that we see more buying of puts over calls. Google, trying to avert the situation here of closing below 300, but if we do by the end of the session that we have a bearish confirmation on Alphabet, and it comes to Meta, we're looking at a close below the 50, which looks likely here. I'd love to see a close below the trend line again. That'd be a double confirmation, but closing below the 50 is good enough. And we're probably going to initiate a short position against Meta before the close today, if that is the case. Okay, folks, so it looks like we got it right, despite the fact that the data here is not shown. Let's give it a refresh here, see if it updates. Yep, okay, we're back on track. I think we go to 75, but you can't go above. You can't really take the risk and move above if you're the market maker, because if you do that, say we get a headline or Trump or an Al Gore reaction, and then they dump the tape, all of a sudden the market maker will be under a lot of obligation for these puts right here. So I think that we have to go back down again in this tape. In any case, let's do the movers to the upside and the downside, see what we have in terms of a theme. I see Western Alliance down big today. We're short the name, so we love to see that. False breakout, the real breakout. So it looks like we have a problem with Western Alliance. So notice here, folks, that it's not just the geopolitics, crude oil going up. That's not it. That's one factor. The other factor is we have the jobs number, and that's pushing yields higher. That's damaging banks. That's damaging the staples, all of the dividend-paying sectors of the market going down. But on top of that, we're still talking about this private credit issue. And it looks to me that the banks and the private credit stocks are going down big. So it ain't just Western Alliance. Jeffries continues to collapse here. We're also short Jeffries. You see it in BlackRock, even BlackRock. I was short BlackRock. They would never allow me to short BlackRock, by the way. If I was doing money management right now, professionally, they would never allow me to short BlackRock. But we did, and right now we see bad news about the redemptions. So we have the financial setup also not looking pretty good here. So a triple whammy, if you may, in the indices. Really hard to see if the dip buyers are going to make it here and push the indices higher. On the backs of what? AVGO and NVIDIA? We're going to talk about chips again. We have a problem in the private equity. You see Blue Owl continues to go down. CCL, that's, of course, the geopolitical theme as we see crude oil going up. RCL, the same thing. So I'm seeing two themes here. Geopolitics pushing the price of crude higher. Airliners down. Cruises down. We also have some of the financial institutions going down because of this risk. A matter of fact, if we just double check here, BKLN should be down today. Yep, it is, because we're back again talking about this credit risk that we have in the economy. I see airliners again. I see data center like Bloom Energy coming back down. Maybe a rising wedge breakdown, but not confirmed yet. What else do we see here? KRE, that's your systemic risk situation that we have, not just from crude oil, but what's going on with the banks. Lumentum, is it? I think we have the top. So we sold a lot of naked calls. Is it time to buy puts? We're probably going to do that or add to the short before the end of the session. Apollo also suggests that we have this private credit theme. Bitcoin down a touch today, so we see names like MicroStrategy coming back down, touch to 50. Now coming back in the gap, so if we close below the gap at 132.68, it's probably going to be a bearish confirmation for MicroStrategy. Plenty of names here, folks, down 2-3%. The banks, we talked about that. Geopolitical theme, I see yields going up, so Lennar is going down, the home builders. Cyclicals are going down now, because remember what we talked about, right? We talked about private equity. If private equity goes down, then the market goes to the Citrine theme, which is financials go down, and then that impacts consumer spending in the economy. And we see the cruises, the hotels, the casinos, the airliners down. So I think there's some of that going on in the theme today. Oh boy, look at this. A ton of names losing over 2% of their value. It's going higher, though. Marvell, that's earnings. That's the exception. You have USO oil. So a lot of you are sitting on the 90 and the 100 calls. I would, if you have really short expiration dates, I would book some profits. Or at least before the end of the session, you probably want to buy Monday's USO puts as a hedge. Let's say that you have March 20 calls and beyond, and you're deep in the money. I would still complement it with one put, at least a trade for Monday, buying puts on USO just in case. But it's a decent breakout and plenty of profits been made. The VIX is going up. VIX above 25. Closing above 25 means more pain to come. Closing below 25 keeps the consolidation alive. I see some of the Chinese names catching a bit today. JD, TCOM, XPEV, but I don't trust it with the dollar going up, to be honest with you. If the dollar moves up, I just don't trust it. I see a question of wheat in Discord. So look, ABC breakout. Wheat is one of those commodities that are involved in the geopolitical situation. So wheat goes up. Don't forget that if energy goes up, it takes more to grow the wheat. So wheat prices go up, and that's passed down to the end consumer. So we see a breakout. You're going to stick with wheat here. Today we see silver up along with gold, but not much. It's because of that jobs number. It dropped the dollar a little bit, but like I said, probably the dollar is going to come back up with crude oil trading continues to break out. And by the way, let's do this. Let me show you this. Let's go to crude oil and look at the options. So crude oil, April. Let's see if you guys are with me here. I think you guys are with me. Stream is still going on. Anyhow, we're looking at the monthly options, and I want to show you that the 85, right? The 85 had the, let's look here. This is April 26. So the 85 calls had really big open interest. That's already been satisfied. What is the next open interest? We have 90. So I think they get 90 because they're betting on 90. There's no competition from the puts at all in crude oil contracts. It's a one-way street, so I think the crude oil probably going to push it to 90. We're almost there. So 90 is going to happen. Maybe that becomes sort of a top in the day. And this is why I say that maybe you want to begin to book some profits in USO calls, especially if you have really short-dated expirations. But I'm going to bring it back here to the SPY. There we go. Coming back down because this contract is dangerous. The 670 is really dangerous because they're buying a lot of volume. It has really high open interest. My 2 cents is we might actually go down and retest that. Kroger is doing pretty good, so keeping my shares for now. But boy, was I close yesterday to just get the hell out. Because it's just a matter of time before he begins lashing and talking shit about the grocery stores. See rebound in Oracle here, but does it change anything? Let's zoom in. If it closed above I have it at 156.60. This is because of the layoffs. The rumor is they're going to lay off 30,000 employees plus in Oracle. I don't think it solves the problem though. NTR and I think Mosaic was doing pretty good, at least earlier in this session. I don't know what happened here. Let's check on Mosaic. So Nutrient doing pretty good. I think we have an ABC breakout coming. Lockheed rebounding, but boy, that could be in A, B, C, and we drop down. So I'd be really careful with the defense contractors. If you made profits and you bought close to the top, you probably want to book some profit right now. So we see Baidu, that's the Chinese. I don't trust it either, but unless the dollar goes down. Otherwise, I'm not trusting the rebound in Chinese equities. Raytheon catching a rebound a little bit, but that could be faded. EQT flirting here with breaking above the highs. That's good. Costco. I have a bullish cross here, but I'm going to wait because this is a $1,000 stock. So if I buy it right here, I spend a lot of money without confirmation. And with the crude oil going up, that's going to increase their cost. So I'm going to give it till next week before I decide on Costco. Where did Mosaic go? See, it was positive in the morning. It was up 2%. Now it gave up a lot of these gains. That's not good. But we'll give it the benefit of the doubt. Inverse on the shoulder, cup and handle. Let's see if that works out. But if we go negative by the end of the session, that's going to be really disappointing because it was up over 2% of the pre-market session and Nutrient is up too. In any case, folks, decliners, obviously a lot of them, just a ton of decliners all over the place. So I'm going to bring it back to the SPY right here. The 5 minutes, oh boy, coming back down. Q's coming back down, dollar coming back up, crude is at the highs, VIX beginning to move higher, Bitcoin coming back down, Apple down, Nvidia down, AVG also coming back down, Microsoft, Alphabet, Meta. Meta's holding a lot better. But anyhow, let's do the unusual activities and then take your comments and your questions, folks. Looking for higher premiums, shorter expiration dates. I'm going to push that to 700. out of the money, volume above the open interest, and we see one here. TVTX. We're buying the 35 and the 50 calls. Right now, trading about 26, 27. So, got to be an insider trade, right? $3 to $4 million. TVTX. TVTX. Looking at the technicals here, they don't look pretty good. I mean, it looks like it covered the gap and now it's kind of rolling over, right? But maybe they know something that you and I don't, because this is a big trade here. 35 and 50, we're trading way above. So we're giving it here, right around the gap, and then 55 at all-time highs. So I would try to follow at least one leg of this trade right here. So I'm going to do maybe this leg, the 50, as a wild shot, because it's going to take 100%. The stock has to double before you make money. But it looks like a classic insider trade to me. Not seeing anything interesting here. Crude oil, there we go. Look, they're selling a lot of calls, which is, again, a sign that they're worried about the top. They're booking profits. So I think we have more upside to come based on the geopolitical situation. And Trump right now says unconditional surrender. So it doesn't look like we have a settlement. But just in case, because you never know what's going to happen in the weekend, you got to buy some USO puts before the close. And this is kind of a sign for you that be careful, they're booking profits out of a lot of the calls for at least April. This looks to me that it's the same trader, the same firm, booking these calls. Now, we'll see if they're going to roll the calls to a newer contract, like the May contract, for example. We'll see if that shows up at the end of the session. E-mini, they're buying the 24,900 or selling the calls at 24,900 right now. We're trading at 24,700. So betting that we're probably going to head further to the downside. HYG buying the 76, 79 puts. Didn't look at HYG for a long time. But here it is. It is breaking down. So we see 79, 76. Oh boy, the 76 will be way too far. That's an interesting bet. That's pretty much a crash kind of bet, because the HYG would not go down to 76 unless we have a market crash. Interesting. Got Micron here by the 290 puts. So we look at Micron. 290. Boy, they're going far and bold here. 290. That would be a big drop. They're betting on a crash, folks. I mean, I'm just combining here the Micron trade. I'm combining the HYG trade. And looking at some of the data here, it shows that they're probably betting on something really ugly to happen. Anyhow, let's wrap it up right here, folks, and take your comments and your questions. So we got a question here about Maverick. The DXY is up, Dixie, and wheat is up today. I know you like wheat long term, but can you see it breaking out? Yeah, it is breaking out. So you want to stick with wheat here. Wheat is breaking out, and I think we have, I mean, it's more of a back end of the year kind of play, but I would not be surprised if the situation in Iran continues, that you could see a bigger pop, that we had maybe the 26 or 25. So wheat is part of the play. Why is it part of the play? Because you got to understand that the Gulf countries, Saudi, Qatar, Kuwait, whatever, all of these countries import their food. So they import the wheat. And the wheat goes through the strait. So if they can't access the wheat that comes from Australia and Russia and Ukraine, it comes through the strait, then they're going to have to go with wheat from the U.S., which will come from the Red Sea side. And if that is the case, then there's demand being rerouted from Australian, Ukrainian, Russian, Indian, Chinese, whatever wheat, toward U.S. wheat. And this is what this ETF tracks, U.S. wheat prices. So we see a little bit of demand here showing up. Got a strong rebound here from 72.70. Let's see. Dixie not coming down. Crude not down. VIX coming down a little bit. Apple, right? Apple popping a little bit. NVIDIA, but not seeing it. Not seeing it as really strong here. Okay, any opinion on what companies get added to the S&P this month? You gotta ask AI for that. It'll help you more than I can. HMF Gold and Silver are happy with their data, even DXY trading higher. DXY is actually trading a little bit to the downside right now, so that's why gold and silver are trading higher. But we'll see what happens at the end of the session. I think that the dollar could go higher. If we see crude oil continuing to trade higher, then the dollar has to follow. Hey, Mev, happy Friday. I got the USO 19 June, 95 calls. You want to roll or take profit? You got a lot of time. For 95, you got a lot of time. But like I said, you got to do something to hedge here because it's a little bit excessive. So if you're happy with the profits, you want to take it, you take it. But you're probably going to think about, well, what if something happens the weekend? We have more gains to come. Okay, so what do we do here? We keep the 95. We can do a diagonal or we can do a calendar. So USO, you have the 95 all the way to June. Got $2,000 right now. One option is just a classic. You turn it into a classic spread. So you sell the 110 and you capture $15. Or you sell the even 120 and capture about $12, $1,200 per contract. That's not a bad deal, right? Another way you can do it is you sell an upside call, but for a shorter expiration date, in this case, the 124 March, and you're locking in some of the profits. You can combine strategies, so you can sell the 120 for April, for example. No, that's not it. Here we go. So here you're raising about, let's say, $10. And then you're using some of that $10 to buy a put for the expiration date of the 11th. That's going to be the next one, right? So here you're buying at 105. We're trading at 105. How about if we get the 100 puts? So here, look at this trade right here. If we move the expiration date here, April 17th. There we go. So you're selling the 120 for April 17 or June, whichever one you like. But I'm just giving you an example here. You're raising $10. Then you're using about $3 out of that to have a hedge for Monday, just in case there is some sort of a peace deal or talks or whatever manipulation methods they're going to throw at you. You have that protection policy at 100. That will appreciate in value. And then you can decide what you want to do with the 95 that expires in June 18. Just an idea to think about. Bottom line is, you got to do something to lock in some of your profits today. Okay, Oracle short position shares. Are we holding it through and waiting for more downside? Or are we going to add to the short? Problem is I'm up big in the short, so I don't see the incentive to add at this point. I mean, I shorted right around here. So averaging down like this is not going to make a lot of sense to me. If anything, I would just hedge. We have a report coming out pretty soon, and the company might try to pump the stock as much as they can by layoff announcement and maybe cutting some capex. So I'd like to have some call options as a hedge against my shares. That way, let's say if we pop to 185, for example, I get the exit of 170 and book my profits. So I'll be just buying calls in Oracle. I would not be adding to the position right now. Hershey's shareholder and protecting profits. I see divergence to the hour side, topping candle, considering a short-term short. Is it better to sell calls or buy puts? You can do both. You can do both as a shareholder. It's called a collar strategy. And I agree with you that we have a little bit of weakness here, especially with the bond yields going up. That's going to be a problem. But here we have a higher high and maybe going to meet a higher low at some point. But you never know. It might be ugly and we head down to 210 again. So here I would buy the 220 puts, but I would probably sell the 240 calls. So it looks something like this. So we're buying the 220 puts. And then we're selling the calls at 240. But we need to sell it for a longer expiration date. If we do that, so we're selling the 240 for expiration date 17th of April. There's no volume right now, so might want to move that down to 30. But if we do 130 for March 20 or April 17, that's going to be too much. I would still try to do, by the end of the session, I would still try to do the 240. Put a limit order. Try 3.5. At 3.5, you're not going to get the 4, so you can get 3.5. You get 3.5, and then you buy this guy right here for 360, right? And all in all, you have a hedging strategy here where you sold the call, you bought a put, and that way you're protected. If we have more downside to come, you stop at 220. And if we get a rebound, you're probably not going to go above 240 in about 2 weeks. SPY finding a footing here. It's all because the VIX is coming back down. Not seeing crude. I see the dollar coming back down, but hey, Mav, Mark took profits and want to re-enter again. I see divergences in the RSI. Therefore, I'm not sure if it's a good place to enter right now. How would you judge the next entrance to avoid bad timing? So MRK, you decided to exit for a reason. Why are you double thinking right now? Maybe you shouldn't have sold then if you're thinking about entering right now. You sold, I'm assuming right at the top here, 120 and above. Right now, you got support at the 50. Whether that holds or not, we have no idea. Right now, it looks that we have a mini bounce, but the session is still young and we can close below. And if we close below, we're going to find support around here. The next support will be in this zone right here, which will be, let's say, 108 to 111. So right now, can you re-enter? Sure, you can re-enter, but set a stop loss if we close below the 50 days moving average. Otherwise, you can wait and see if we can break below the 50 and find a support at a lower price, and that makes a better entry for you. But I would say don't doubt yourself. If you sold Merck, you sold it for a reason. Maybe you need to rotate to another name, like AbbVie, for example. Okay, Mav, did you hear about the CEO who said that the chip shortage is a myth? Yes. Yes, so that's what I've been talking about. So he's talking about the memory chip, right? He's saying that there is no shortage in memory. We can supply pretty fast. So this is SNDK, this is Micron, and this is WDC, these names. Or I think they're pretty much topping right now and ready to go down. Okay, Mav, FedEx and FIGS. Do not own the asset. I want to short the shares. How can I protect myself from a change in direction? You buy calls, sell calls. You don't sell calls unless you're already short. Now, what is the best strategy? I mean, you can sell calls if you want to short at a certain price. But let's look at the charts here. FedEx, FDX. Looking at the daily chart, lower Bollinger Bands giving us a little bit of support right here. My assumption would be it'll probably go up to close the gap before it goes down. And what that would do is close the gap and allow the Bollinger Bands to expand before we're able to head down to the 50. So you can wait till we touch the gap again. If you think, no, the gap is not going to be closed and we're just going to keep going down, then you can initiate a first increment right now in FedEx. and then maybe use really short-term calls to hedge against the rebound. But to be honest with you, if you do it via increments, you really don't need the calls because there is a reason why you're doing it via increments. You're entering right now, and if it goes up, you're probably going to enter a second increment or a third increment. So I would say enter with one increment right now because you might be onto something here that FedEx indeed topped and it's ready to go down. I mean, there's a huge divergence here out of the moving averages, be it the 20, the 50, the 200. So you need to go down and meet some of these moving averages. So I think you're onto something, but you don't want to do the position all at once. Now, Figs. This name, I don't know why you want to short it because we talked about it in the unusual activities and they got it right. And now it's consolidating in a bull flag pattern. So if you want to short this name, you can sell naked calls and assume, for example, that 20 is going to be a top. So we go FIGS. In this case, you sell the 20 calls. You're not going to get a lot of credit for it, though. And there's no volume, so leave this one alone. It's just not a good-looking chart for a short. And concentrate on FedEx instead. I nibbled on both Palantir 130 puts yesterday. The expiration date is April 17th. With Palantir up today, notice that puts that I bought yesterday increased in value. I guess others are betting on down to, because we have an increase in implied volatility. So that's what happened. Implied volatility went higher, so even though you bought the puts and the stock went higher, we don't have the close below 150, by the way, so we don't have a confirmation yet. So maybe you jumped the gun a little bit too early here, but since the appreciation in Vega is helping you out, I say stick with it. You only want to close if we begin to close above the moving averages, the 50 and then the 200. If we do that, then you have a lot of risk and you don't want to hold the trade all the way to April. But right now, since you have enough time, you're getting rewarded by the appreciation of Vega, the implied volatility, even though the price went against you today, which is the Delta. So Delta was against you, but Vega compensated you. Okay, finding another resistance here at the same level, about 76. We continue to find resistance at the SPY and the Qs about 605. I have a lot of puts happening in oil, and the IV is rising. Also, European countries can use security supply article to keep buying Russian oil. There are a lot of ways to maneuver. Right? There are a lot of ways to maneuver. We can release the SPR here, Strategic Petroleum Reserve. That could be an option that Trump could do it. But you have to understand that if they do these measures too early, we're only 1 week in. If you do it too early, you might actually panic the market. Why? Because the question is going to be, why too early? Why are you doing an emergency measure right now? We're only 1 week in. Maybe you're thinking that this is going to prolong for months, and this is why you're doing it right now. And it turns out to be a net negative, and we see prices going up instead of going down. The other thing is the oil countries in the Gulf are saying that they're going to shut down supply altogether within next week. There was a huge Financial Times interview with Qatar, and they said that they're betting that the price of oil will go to 150 if this continues. So a lot of traders right now, especially retail investors, and I think a lot of the influencers on X are saying short oil. And when I hear that, I'm saying, okay, it's not the time to short it yet. We'll probably have another pop. And when these guys begin to chase it, it's the point where you want to short it. So just to be safe, you want to buy some USO puts. That's for sure. That's given. You have to do it. But do you abandon your calls or your bullish trades on crude oil? No. Do you short crude oil? Of course not. Any quick options play for next week to capitalize on today's volatility? I would say we're probably going to have more downside to come because the SPY is going to close below the range finally, which means now we begin to count down to the 200 days moving average. But let's wait and see, because you might have another fight and they try to close it at the end of the day above. But looking at it right now, we had a pierce and we got the rescue. Are we going to do that again? I don't think so. I think the data is really bad. And if anything, we're probably going to flush at the end of the session. So I would say here, let's say that we trade below 672.70. I have it at 0.7, but let's get a specific number here. 672.46. This was the point where we got support, meaning if we come back down and break below this level right here, that ensures that, nope, we're not going to go ahead and close the gap and close above 677. We have broken the boundaries for good now. And that means you're going to begin to place your bets for the revisit to the 200 days moving average. So 666 comes into play, 660, 55. So keep an eye here. You might need to make a decision pretty soon. Hey, Mav, what is your opinion on wheat? So we just talked about wheat, right? Wheat, you got to stick with it. We just talked about the dynamic of the Gulf countries now having to buy U.S. wheat, and that's going to be pretty good for the commodity. Also in the UAE, 40% of the oil being shipped through Fujairah, and the other in Abu Dhabi, 30%. Yeah, it's after the Strait of Hormuz, but it's still within the reach of Iran. And they bombed Fujairah, right? There was a bombing in the port, I believe, just a couple of days ago. So that's not going to help. The only country that has a maneuver right now is Saudi Arabia, because Saudi Arabia has a pipeline that goes from the Gulf all the way to the Red Sea, and they can at least get some of their product out to the market. Now, if things get ugly, if they start to pick up a fight with Iran, Iran has the option of bombing the pipeline, and then it gets really ugly. But for the UAE, they're in a really tough position right now. Hey, Mav, doesn't seem like there's an inverse gamma risk. Is it just a range day? Be careful what you wish for here, because the day is still young, and we have a ton of open interest here. There's a lot of risk for an inverse gamma. Don't dismiss that. It's too early. Should we sell USO shares as well? Here's my 2 cents. Did we go up too much today? Yes. Does it make sense to book profits? Yes. But is there a possibility that we see more gains to come next week? Absolutely. So how do we balance all of that? You still need to have a bullish bet, but you need to book some profits. If you don't want to do that, you need to have at least Monday or Wednesday USO puts as your protection policy. You can combine strategies. You can book, for example, 0.5% of your, 50% of your position, half of your position. You can book that right now. Given the fact that USO, by the way, is a levered index, so it's going to move down by a lot, it's going to move up by a lot. And right now, today, you're up about 6 to 7%. So why not book half, leave half, and then add the USO puts for either Monday or Wednesday's expiration or Friday's expiration, whichever one you want for next week. That would be the proper strategy to deal with this situation. But I think it's a mistake to exit all of the positions altogether, because things will get worse before they get better. And over the weekend, who the hell knows what's going to happen? Iran could get more aggressive, and we see attacking on the oil facilities, because that's the only strategy they have left, folks. You have to understand that. They cannot really compete in the ground. They can't continue to fight back. They can't continue to fire missiles. So the only option they got is to continue to play this strategy of energy as a weapon. And I don't think they're going to give that anytime soon. Okay, Mav, should I close my WAL 75 puts for March? It seems that WAL is reaching the 200 days moving average. You're up about 250%. So you have 75 puts. That's way in the money right now. And you have March 20 expiration, so you don't have a lot of time left. I would book profits. I think this is the day when the implied volatility is way too high and you book profits. And you're right. Maybe you're add some support right here. If you look at the weekly, you have the 200, so maybe another few dollars. But right now, the implied volatility is at the highest. So you want to exploit that and book the 250%. That's a decent gain. Okay, Stone, you have holding SPY puts for the 20th, 680, 670, and then on the 27th, you have 70, 60. Okay, could we discuss the 80, 70? So the 80, 70 is already in the money. Do we keep that? Yeah, I think that's worth keeping. Let's talk about the next one, which is 70, 60. Do we keep that since we have another week? I think it's worth keeping, to be honest with you. Both of them are they're both worth keeping. Now, let's say by the end of the session, we're trading, for example, closer to 77. I would say let's close one of these trades. But if we begin to head down again, and we're closer to 670, then you probably want to keep both because you're going to get the full credit of the 680, 670 for the 20th. And then the 27th, the 670, 660, still have enough time that you could have appreciation in that value. So I would say right now, stay put. Don't change anything, because if you book profits, you might deprive yourself from the entirety of the credit that you could be capturing by the 20th. Okay, any views in the VIX? The VIX is selling off a little bit here, but name of the game is, do we close above 25 by the end of the session or not? That's what it really comes down to. If we close above 25, then forget about it. We have another pop coming, and next stop would be at around 35. Mav, you're thinking about taking profits. So if you on USO shares, you don't do options. You can book profits if you're happy to book profits. But I know that part of you is going to begin to ask before the end of the session, what if it goes higher? And you're going to ask me whether I should jump in again. So I'm just telling you right now, another approach you can consider is book half and then buy one USO puts, or like, let's say 1 to 2. So if you have 200 contracts, for example, of USO calls, you're going to buy 100 of USO puts with the expiration date of next week as your protection policy. You have to do something in locking in some of your profits, but you got to leave some bets, some chips on the table, because I think we have more gains to come. Okay, took Tesla Butterfly 400, 395, 390. You're up now. Should I take profits? Is it crazy to go greedy? So you didn't give me the expiration date, though. So I can't help you here. TSLA 400, so you're in the money in the 400, 395, not showing up today. So if you're looking at the expiration date of today, I would keep it. I would keep it a little bit more. Maybe Tesla get a rejection of 400 and then begins to trade down, but not really cut below 395. If you're nervous about might go higher or cut below 95, then book the profits. I mean, at the end of the day, it expires today, so you don't have a lot of time to be cute with it. What's up with SLV? Opened higher than yesterday, close, unlike the GDX. SLV is trading the commodity, it's not trading the miners. GDX is trading the miners, the gold miners. And the price of crude oil is not good for the gold miners. That's an expense, right? They have to pay money to transport everything. But the commodity goes up because the dollar pulled back. Okay, if UCO drops, so will UNG. There's not a lot of correlation here, okay? There's some correlation, but not a lot. Even though the energy crisis is more likely, yes. So UNG, like I said, UNG is going to be a little bit of a longer term play because it's going to take a little bit of time before Europe and Asia begin to exhaust their inventories and the storage. If the crisis is not solved by then, they're going to have to reroute the demand toward U.S. natural gas. And the market is going to sniff it ahead of time, by the way. You're going to see by the time we get the headline that Europe is now buying U.S. LNG, we will probably be at 15, 16. Now, what would be the enemy of this trade of being bullish UNG? Let's say over the weekend, we have a resolution. Iran made a deal and the strait is now open. Okay, now it's going to go down. But absent of that, if you don't see that happening, I think that it's worthwhile to bet that the UNG is going to begin to break to the upside. How do we position for Monday? Typically, I hold my short position and end up being down Monday. Well, if you have short dated expiration, of course, that's going to be a problem, right? Because you got to remember, if we close down big today, assuming there's no other headline, the mechanics say you close down Friday, got to have a green Monday because you're buying whatever puts expired in the money. You're buying those shares. So we see a rebound. If you have expiration dates for that particular week, and you're out of the money, yeah, you're going to see a flip. So you have to think about that and calculate. If I have expiration date next week and I'm still out of the money, but my trade is up, then should I book profits, wait for Monday, then add the trade again, or maybe book half, or maybe sell a debit spread, open a spread on it? So you have a lot of options here to get around this problem. How do you think? Yeah, you're right. Could be a tweet that could be flipping the market. So just think about these strategies that we just talked about. Hey, Matt, thoughts on that gas here? Going to run today after getting through the resistance? I think so. We just looked at it, and I think it's worthwhile to stay long and have upside bets on UNG. Thoughts on feeler entry for Tesla spread? 390, 380. We're talking about the put spreads for the 20th. Look, this is going to be an okay trade if we don't close above 400 today. So can you wait to make this trade by the end of the day? I think you can wait. Unless you have a definitive candle here that tells you that we're not going to make it above 400. We have a step here, a reversal, a confirmation, certainty. And right now, I don't see it happening. There's still risk that Tesla could make it above 400. And if it does make it above 400 and close above 400, then you don't want to do the 390 for March 20 because that's too soon and it's out of the money. Now, let's say if we see this happening, resistance at 400 and then boom, it begins to break down. Okay, at that point, it's worthwhile putting the trade because you got a rejection and you're probably going to head down and retest these lows right here. So the trade at that point is worth it. Did you follow the EWY 125, 120 puts that we discussed in the stream? So EWY, not moving much, but I think with the price of crude oil, I think this is a good trade. So I might enter the trade before the end of the session. I think that's an opportunity. Okay, you have the SPY 673 for today. If we break 676, should I cut? 73. Okay, let's take a look here. 73, you're close enough. Are you up? If you're up in the trade, I would say if this was my trade, I'd keep it because I think that we might begin to head down here and you might be in the money by the end of the session. When do I cut it? If we trade above the rejection right here. So the high was 676. If we trade above 676 again, then forget about it. It's not going to work out. But right now, you got a pretty good shot that it could work out. So I would keep it for a little bit longer, see what happens. And 74 is even better because you're a little closer to the money right now. I opened USO debit spread for 88.89, but don't want to close today because you already have $1. Okay, you only have $1 right here. You bought the 88, you sold the 89. Both of them are in the money, so you're not going to make anything. If the price of USO goes up, you're not going to make anything. You're stuck at $1. So you probably want to close it or exercise and then find a new trade. If you exercise, you're going to capture the $1, the full $1. So maybe you want to exercise both of them and book that profit and then think about a new trade on USO. But right now, your profits are locked. I don't know if this was already discussed. Does the activity suggest a move by China and Taiwan could be next? I'm not going to speculate on that right now. I think China has a meeting in April, and China is not really interested right now in invading Taiwan. It just doesn't make sense geopolitically. It doesn't make sense for China to make such a stupid move right now. Maybe they have to wait and watch the U.S. deplete the resources. Maybe we get knee deep in this conflict and we have troops in the ground in Iran. And China can wait and watch and see the U.S. depleting itself. And then when we become too weak, they can invade Taiwan. Okay, Lenny, you sold the 35 USO covered calls. Good for you. At the time, where was the highest? Okay, this is the way we deal with it. Now we're approaching 35. And it's 2 weeks till the 20th. I think you're safe. Okay, I don't think you're 35. I think you're safe. I think you're safe for now. At least you're going to have some decay on those covered calls that you sold. And you can capture 20%, 30%. Let's say that we move up a little bit here. And by the end of the session, we don't close above 35. Maybe you can buy it back and have some of that credit in your pocket. So don't think about selling a covered call here that you have to stick with it all the way till the end. You can book some of that credit. 20%, 10%, 15%, that's good enough. Especially if you think that we're going to head higher. And there is risk for more upside above 35 by next week. I'm not seeing crude going down. I'm seeing the dollar going down, which causing the VIX to go down a touch, but not out of the woods here. Hey, Mav, is it safe to start a position in GLD given the weak data today? I would say no. I would say no because you have conflicting evidence. You have the dollar coming back down, but at the same time, you have bond yields going up. So that doesn't tell me that I should be going to gold right now. Yeah, it's just such a weak rebound. So my answer has to be no. 30 minutes ago, Iranian forces bombed. There was another incident too. Earlier, there was another incident where another ship got hit. So, that's why the price of oil is going up. Hey, Mav, we have the 417 RTX 210, 220 call spread. Hold or fold. 210, 220. I'm assuming you have the calls, right? So, look, right now, Trump didn't say anything. So, can we, right, assume that we have a break to the upside? Sure, I think that's worthwhile. And you 210, 220, not too far. If this was my trade, you have enough time, I would keep it. For now, at least, I'd keep it. Mav, you hedged a lot of positions yesterday. Okay, that's good for you, right? In a day like today, at least you're hedged. And if we have more sell-off to come, at least we've got some protection policy. Hey, Mav, can you see Microsoft moving to 420, 423 in this environment with the current sentiment so bad? It's not so bad in Microsoft, though. Microsoft is not showing anything here. And it could. I said theoretically we can go back to 420, but if we see a red candle today, we begin to head down to the lows of the day. Then nope, we're not going to make it to 420, and you need to close your call options. Mav, wheat for the UAE bypasses the Strait. And we have the, They have strategic reserve, but the question is, if this continues to happen, the market always looks forward. If this continues to happen, the conflict is not resolved by the weekend, for example, the market is going to begin to look forward in the next 3 months. Are we going to have a shortage? And if the answer is yes, it's just going to assume that the demand is going to reroute toward U.S. wheat. And the price action already speaking for that case. You see wheat already moving higher. So if we look at the futures, wheat today is up about 4%. So the market is telling us right here that watch out, this is going to be a problem. Don't forget that Iran is also a producer of wheat. So there's a case of shortage in the market too. 175 puts for NVIDIA next Friday, looking good to me. 175, yeah, and your confirmation would be if we lose 180 today. If we lose 180, then yes. I think it's worthwhile. I think it's worthwhile because it is up to 200. We have a bear flag. I think it's worth a shot. 35 in the red. Okay, you sold it earlier this week. Oh, okay. Look, I would still wait till the end of the session because you're not close to 35. Who knows? Maybe we're going to head down by the end of the session. You never know. But at the end of the session, if we're still trading at these levels right here, you have to ask yourself a question. Are you okay selling at 35? If the answer is no, then you have to buy it back and sell something above. Mav, any opinion on the dollar performance today? It looks toppy. Could be bullish for silver. I'm not sure because with the price of crude oil going up and still sticking higher, I think the dollar could find a footing here. Maybe it's being sold right now because of the European market, but after the European close, I think we see a rebound in the dollar. If crude oil doesn't give up, I think the dollar has to rebound. So let's not make assumptions about gold and silver right now. Maverick, what do you think of UNG? I think it's worthwhile that you have a bet on it because sooner than later, demand is going to reroute toward U.S. LNG. Take half profits in UNG. No. UCO went way too high. UCO went way too high today. So I think it's reasonable to book some profits. UNG didn't move much. And I think that you should be keeping the bet. We're just beginning to move higher again. So we got the break, came back down, rechecked, and we went back to the highs again. That's your confirmation that the initial reaction was correct, and we have more gains to come. So I would not book profits from UNG. I would keep it. I would book half of the profits if I have UCO or USO with short expiration dates. If you have April, if you have May, you don't need to do any of that. You just have to buy USO or UCO puts with the expiration date of next week as your hedge. But you keep the bullish trade. If you have expiration date for next week for your bullish trade in UCO or USO, I want you to book half to have that as your hedging strategy. Okay, Mav, GLW. Let's look at GLW. I might add a short on it today because it looks toppy to me. Like the weekly chart here looks toppy, bearish engulfing. So I sold a bunch of calls, naked calls. I think it's time to add some puts. So we'll do that before the end of the session today. Give you an update in the short portfolio. Anything changing in the SPY, volume, open interest? Let's see. In the calls, 75 remains the highest open interest. The puts are too risky. I think the market maker might try to be cute and try to trade 76. That's what they tried to do, by the way, to eliminate at least the new feedback. Because the open interest is not going to be eliminated, but the volume is the newest feedback. So that's what they're trying to do. They're trying to move the tape a little bit higher than 75, 76, and try to get these guys who bought today to exit. But at the end of the day, folks, before we close, can the market maker really stay above 75 or 76 and risk that we're going to have a sell-off at the end of the session because of whatever, and then they're going to be obligated for the 73 or perhaps the 70? They're not that stupid, folks. So they're just moving the tape a little bit and keeping it here to make sure that the folks who made bets on the puts earlier this session and made profits, they book their profits, clear up the way, and then after that, they move the tape down with less obligations. Good morning, Mav. I took the trade with natural gas yesterday that you suggested and did good. You're in Boyle and EQT. You suggest I add more. I suggested you hold it as it is. You have a bet. It's pretty good. Let's ride it. Unless you feel that you didn't add enough. If you didn't add enough, then I would say add to UNG. Hey, Mav, thoughts on Disney today? You have some shares. Not sure if I should exit. I'm in Disney. I'm still losing in the position, but I'm not exiting because I think it's gonna move higher once all of this is over. So I'm gonna stick with Disney here, but I have 100 puts. So you buy the 100 puts or maybe the 98 puts if you want to do that right now, and that should be your hedging strategy all the way to March 20. Look, if there's a flush by March 20, we're trading at 92, for example, exercise the puts and exit. I think that's the best policy right now in dealing with Disney. SPY holding in the pain level right now. These are the pain level. Just try to make sure that the puts get out of the way and see if the call is going to buy above 275. That's what they're doing here. But this contract seals the deal. The 680. It has a big number of open interests, so it tells the market maker to stay below 2 cents, folks. We trade to 76. That's going to be highs of the day, and then come back down and maybe head back to 670 at the end of the session. That's what I see from this tape here. Crude oil not giving up. And the dollar, let's see here. Dollar coming back down a little bit, helping with volatility, but not seeing, besides AVGO, I'm not seeing any strong name amongst the big cap here. Meta? Nope. It's just AVGO alone, really. So it looks weak to me. It looks like a weak kind of pop by the market maker. And we're probably going to have a flush by the end of the session. Can you please comment on the 30-year bond yield and the XHB? Is your outlook in the short and medium term? So right now we see a rebound, right? We see a rebound in the 30. Yep. So a little bit of a rebound, but all in all, this is bad for the XHB because the jobs number is bad. So we've broken right now the pattern of higher highs, higher lows. Now we have a lower low. So you have a bearish break here, and I see more downside to come. Even if bond yields go down, because they're going to be going down for the wrong reasons. You have a double whammy here, folks. You have higher energy, PPI, manufacturing prices. That's bad for the home builders. That means more cost. On top of that, you have weaker jobs data. That means the consumer is getting weaker. And access to credit is becoming tougher with the private credit crisis that we see. It leads you to have the conclusion that you got to be short at least one name in the XHB, if not the ETF as a whole. Puts aren't even up that much anyways, depending on which puts you have. Zero DTs will be tough, but I think if we have a confirmation for the break, let's say we don't go back up within the consolidation range and we have a rescue like this one, but if we close like this below the red line, I think that you should be betting for that 666 as soon as March 20. Mav, I took first position on WMT. You have the 120, 115 puts for April. Expectation of a rebound, the trend line. Do you add today? So let's take a look here. WMT. Transportation cost, right? Not good for them. So got a rebound here, but I think you got a good trade. You have the 120, 115 all the way to April. stick with it. I think sooner than later we're going to break the 50. When do I stop loss? If we close above the top of this candle, 125.68, because that means it's going to go ahead and close the gap right here and maybe challenge the highs. So at that point right here, you cut loss. Right now, you keep it as it is. You break below the 50, you want to double down. Why is Mosaic struggling? It's baffling because it was up 3% in the morning. I don't know why it gave up, and Nutrien is coming back up. And there is a fertilizer situation in Iran, so I'm going to wait till the end of the session and see if it begins to recover and find buyers. Mav, do you have any interest in a starter position in the SPY or the Qs for April? I mean, you can. You can, but you probably want to wait till the end of the session just to have that confirmation that we're heading down. But right now, I would say if you want to buy SPY puts, it would be the 666 for March 20. What do you think about AMD? Oversold rebound. MDB got hit pretty hard, right? Is it oversold? I think it's just catching a rebound along with the software names. Can you play a rebound? Yes. But you always set a stop loss at the lows of the candle, right? So the lows for this candle would be 258. You trade below 258, you have to exit. Otherwise, you have to assume that we maybe have a little bit of more rebounding to do. Maverick, why do? Incomplete. I'm in OK low, June 50 puts. Should I hedge in case of a falling wedge play? And then double down. June 50. There is a little bit of risk, but it looks like it's going to break to the downside, to be honest with you. So right now you're okay. If you see a breakout, I would say if we trade, let's say above 65, maybe. But right now, it looks like the trade is intact. Leave it as it is. Do you think, there it is. Do you think CoreWeave is going to go up today? Is it worth to close the short? What price did you get in? Because I'm a big on CoreWeave. I don't want to close. Unless you shorted at 80, you close. But if you shorted at 90, at 100, or above, keep it as it is. I think it's weak. If you look at the weekly chart right here, it looks to me that this guy wants to head down, and you have lower highs, lower lows. I think we have another low coming, and that's going to be break below 65, and then we're going to look back at the IPO price. Before, people buy at night, sell in the next morning. Now we do the opposite. So, because it's the difference between European traders, Asian traders, and U.S. traders. So European traders sell overnight, Asian traders sell overnight, U.S. traders try to scrap zero DTEs or whatever rebound trades they can do. That's what's going on right now. But at the end of the day, you got to look at volatility, look at crude oil, look at the dollar. I mean, the dollar is the only thing that's giving us relief today. But crude oil, VIX, not much. And like I said, the options market right now is probably want to go to 76 just to scare some of the puts that were bought today out of their positions. But then they have to go down again because the pressure from open interest is way, way too high. And then I'm looking at the big caps. Apple looks weak. NVIDIA's not doing much. It's really AVGO. So how much can we stretch AVGO? Let's look at their options right here. AVGO. And you probably want to close a touch below 340 to have maximum pain, right? You have to close just a touch below 340. So I think that AVGO already at the highs of the day, and it's going to begin to head down. Microsoft, not doing much today. Google, maybe, but still consolidating the 300. Meta, maybe. But at the end of the day, I'm just not seeing here why do we go up at this point? Why is the Dixie drilling? weaker jobs data. It's a debate. It's a debate. Do you continue to move the Dixie higher based on crude oil going up, or do you sell it based on the job number? Right now, it looks like the argument of the weaker job number is winning, but you never know what's going to happen by the end of the session here, folks. You got to be careful. This could be really trappy right now. And you make a decision, then you get screwed. So if you haven't made a decision yesterday, I think it's a mistake to make one right now. I think you have to wait closer till we get to the closing hour before you make a decision about your trades that you want to enter. What trade do you suggest for the UNG for March 20? I'm buying shares. I'm not buying the options. But if you want to buy options, I'm going to assume that we go to the 200 days moving average. So that's going to be 13 or 13 and a half. UNG. 13. Cost you about 70. 13 and a half cost you about 55. So either or, I think it's a good trade for UNG. Since it is trading at $12, $13, I just bought shares. Do you think BTC rebound is done? Apologies if you already answered. BTC. No, the rebound is not done because we don't have a reversal yet. You need to take the lows of this candle right here. 67,391.17. That has yet to happen. NVIDIA, AVGO, again, I just don't see AVGO trading above 340 at the end of the session, so we're probably going to come back down. But anyhow, folks, my voice is not really cooperating, so we're probably going to have to wrap it up right here. But we have a session again, the closing hour, right? In a session like today, you really want to have a closing hour discussion again to see where we're trading, what happened throughout the session. Do we see more downside or more upside? I'm looking at Myron right now with the interview in CNBC. And, this guy's a moron. Typically, the Fed doesn't respond to oil prices. No, you should respond. That's your job. But anyways, I looked at San Francisco, what's her name? Daily. And she said that I'm not going to look at the jobs number at all right now. I'm going to look at the average, which means with crude oil going up, the Fed is nervous about that. And the Fed is leaning toward, hey, the inflation risk is bigger than the recession risk, which will be a topic for conversation in the next batch of videos. But right now, look, we've done some progress here. Down about 0.5 percentage point in the Qs, down about 8/10. I think we come back down, folks. That's my call here. We come back down before the end. But anyhow, let's wrap it up right here. And BTC, could this be a bear flag? Too early. Too early. You're speculating too much here. I don't see a bear flag. You really need to cut below the lows of this candle to have any confirmation that it's coming back down in reversal. Thank you, Keymaster. Thank you, everybody. Let's wrap it up right here. But reminder, join us in the closing hour. It's going to be interesting. See you then. Good luck and have a great weekend. Take care.